Good morning once again to all traders and welcome to another market insights video. Stavros is here today. We're going to have a quick look on metals and energies. Now, as you well know, commodities keep rolling. Okay, that has been the case for the past few days, driven not only by the low interest rate environment, also by fiscal expectations and also by expectations that inflation is going to rise. Okay, so the reflation trade as well, this is what it is. This is evident in the US yields rising, but also recently there's been new headlines that inflation is going to peak because credit growth in China is actually saw a very sharp rise, spike. And that means that, a stronger yuan, and when yuan is stronger, that means that inflation is going to rise because the products become more expensive to importers from other countries, mainly the US, to be honest. So now that said, we are expecting the inflation figures today in the US, and it's going to be a very important day, if you want my opinion. And I think we're going to see very good moves going forwards. Now, when we look at the commodities markets, now metals, gold and silver, and also the energies, which are again commodities, the oil, WTI, and gas, are all driven by the reflation trade. But the truth is that it's mainly metals that are driven by the reflation trade. Whereas when we take oil and gas, they're also driven by OPEC-led optimism, and also the expectations that Biden is going to push for a larger stimulus, and that stimulus is going to be implemented by spring. Okay, so this is important. Now the thing is that when we look at the oil particularly, it's been rallying for a while, but yesterday bulls were confronted by the API. Now with risk sentiment remaining upbeat, because we still get reducing COVID-19 cases in the US and we'll get vaccine rollouts, all eyes will shift today on the CPI release. Will it confirm market expectations, or is it going to cause a disruption? We're going to find out soon. But on our technicals though, and with daily wave analysis, as always, you probably think this is a reversal signal on the upside. Well, I think chances are not too good for that to be the case. Okay, although macro related drivers show that that might be the case, technically speaking, we're not there yet. Okay, might be wrong, but we're not there yet. So because we need a new low over here. Okay, now that said, I'm looking at this as a 1, 2, 3, 4 and 5, which is wave A, and I'm expecting a wave B and a C in order to take out wave B around 1893, even 1922. It doesn't really matter. We need it to go up to the previous top and then go down for a fresh low below the 1763, which has been the low registered a few months back, and it is actually our current market correction low. Okay, this does not look like an impulse. Okay, and this to me does not look like ended. Last week we talked about the potential of this being A, B and a C, but obviously with now a new low, I'm not really fan of this. And the truth is, we could still be 1, 2, 3, 4 and 5 over here, but again, no, excuse me, 1, 2, like 3, 4 and 5. But the truth is the increase in volumes down here make me think that we're going to see another leg up, which means we're going to go above the previous wave 1 over here, and we will invalidate these as a C, which means that the 1, 2, 3, 4 and 5 is possibly not the case. But I wouldn't take it off my charts, okay, as another sort of scenario. Now on silver quickly, silver looks like it's going to get a deeper decline. Okay, as you're well known, like a few days back I changed my view over here, and I'm looking at this as an A, B and a C, like a running flat now. Okay, which means what? It means that what will go down here, this is a wave 1, okay, because we ended wave B up here. It looks like it at least, and that is because if we take this as wave 1 and 2, 3, 4, and 5, yeah, this over here and this over here, we had an interaction, okay, which means this is not impulsive any longer. So this is why I don't expect another move up for B. I instead expect potentially, you know, a move down in wave 3 and then 4 and 5, okay? We could end anywhere between 23.55 and 21.63. That still is going to be a running flat in my opinion. Okay, now we don't get any signals on the MACD on the other side, so that means, I mean, either case, we could either have another leg up and then go down or just go straight down, okay? I would be looking at the 28 to validate that, right? Or to invalidate it. Because if we cross above it, then this scenario is going to change. Now on oil, you know that I'm still looking at this as a correction, right? From down here. And I've actually expressed that, like, been talking about this for months now. I still don't think this is an impulse on the upside. Regardless, where we are right now is a very nice cluster at 58.35 or so, yeah? Not only we get wave 3 and 4 extension, but we also get wave 2 and 3 of this minute move, okay? Which means this is where wave 5 ends, right? This is a very nice level, I'll be honest. So here's what I'm looking, you know, because we get a signal on the RSI and the MACD as well, right? I think it's either that we ended up here, which means we're going to go 1, 2, 3, 4, 5 for A, we're going to get a B, and then we're going to get a C for wave B over here. And then we're going to get another impulsive move or an ending diagonal in wave C, okay? This is where we're going to end primary wave C and this correction wave X, and then all the way down in the cycle degree. Or it could be a case where this is 1, 2, this is 3, this is 4, and then we're going to get another move on the upside for wave 5, which means we're going to extend a little bit higher, perhaps to the 60, because the 60, now if we look aside from Fibonacci extensions and all that stuff, guys, is very, very big psychological level. And if we get up to 58, 60, it's very likely that bulls will have an attempt to the 60, okay? Might be weak, might be not weak. In either case, either a failed attempt or a false break, in my opinion, and then move all the way down. And last, natural gas, it's actually moving as we expected. I mean, last week we expected that to be 1 and 2. Obviously, with this pattern over here, now this easily becomes a 1, 2, 3, 4, and 5. And then we've got ABC, ABC, 1, 2. We're going to get a 3, 4, and a 5. I'm looking at this as an expanded flat, yeah, because this move over here indicates that there is a multi-structure move on the downside. And that is always in wave 3. So I'm expecting a 4 and a 5, okay? That is going to get us potentially down to 2.58, and we're going to still be impulsive because our first wave ends at 2.5, okay? Once we do come down here, yeah, we're going to shoot higher. We're going to shoot up to the 338, 346 or so for wave 3. Then we're going to get 4 with a pullback, and then we're going to get 5, anywhere between 3.6, 3.67. This is where minor wave 3 is going to end. Then we're going to get another correction and then another move to the upside. And this is going to be in the immediate wave 1, where I'm expecting it to end around $4. The $4 handle, okay? And this is what I see also on natural gas. Now, in case we break, you know, below, in case we break below this wave 1, then this scenario would change. It would be a case where, you know, we've got a large degree 138, yeah, we've got a large degree like this is 1, 2, 3, 4, 5, yeah, we've got A, B, and a C, and potentially this is going to be a running flat, okay, in case we break it or will come near that level. So this will be all for the days, guys. I hope this video was helpful for you. If you'd like, click the like button. If you have any questions, you know, feel free to ask, and I will get back to you as soon as I can.